Welcome to Seeking Alpha's Wall Street Brunch, our Sunday look ahead to this week's market-moving events, along with the weekend's top news and analysis. Hello, today is Sunday, November 3rd, and I'm your host, Kim Kahn. Tuesday is all anyone will be thinking about as Americans go to the polls, and no matter which party you support, tensions are high. The battle between Vice President Kamala Harris and former President Donald Trump is pretty much a deadlock. Seeking Alpha held an election event this past week for advice no matter what the outcome. Among the highlights, Chris Smith Jr., leader of the Sifting the World Investing Group, says, "On the spending half of the ledger, they're both catastrophes. We have two big government, big spending parties that are hard to differentiate." Brad Thomas, investing group leader of IREIT plus Hoya Capital, says, "When it comes to data centers, you got to go either way politically. All sides are going to benefit from massive growth in technology." Eric Basmajian, investing group leader of EPB Macro Research, says, "Should the economy go into recession or fears of recession resurface, the market will quickly dip, and probably in an abrupt and chaotic fashion." SA analyst Florian Grumes, managing director at Midas Touch Consulting, said he's very bullish on Bitcoin, contending it will break to a new record high and eventually hit $100,000. And Joe Albano, investing group leader of Tech Cash, says, "Even with the NASDAQ at highs, I think there's structures on the chart that aren't really giving me the warm and fuzzies for where we're going to be at the beginning of 2025 and even in Q2. Of course, only a generationally important election could push the Fed down on the front page. Whether or not there is a winner, the Fed will have its decision on Thursday. The consensus is the Fed will cut by 25 basis points. That was pretty much a given even before Friday's weak jobs report that saw only 12,000 payrolls added, but many economists are looking at it as an anomaly given the hurricane and strike effects. What's not an anomaly is the downward revisions to the previous 2 months. That gives the FOMC a green light to cut without worrying too much about the stubborn services prices seen in the last PCE report. Wells Fargo economists say, in considering the target range of the federal funds rate at 4.75 to 5%, we believe the stance of monetary policy is still restrictive. Therefore, even though we see little signs of significant economic stress today, we believe the FOMC needs to reduce the amount of restriction it's importing to the economy to prevent further slowing. We've already peaked in the earnings season calendar, but there are still plenty of names to watch out for. On Monday, Vertex Pharmaceuticals, Palantir Technologies, Constellation Energy, Zoetis, Marriott International, American International Group, Diamondback Energy, and Illumina report results. Ferrari, Apollo Group, Emerson Electric, Marathon Petroleum, Cummins, Microchip Technology, Yum Brands, DuPont, Restaurant Brands International, and Archer Daniels Midland weigh in on Tuesday. Wednesday sees numbers from Novo Nordisk, Toyota Motor, Qualcomm, ARM Holdings, Gilead Sciences, Mercado Libre, CVS Health, McKesson, Williams Companies, Sempra, Johnson Controls, Corteva, and Take-Two Interactive Software. On Thursday, Arista Networks, Duke Energy, Airbnb, Motorola, Air Products Chemicals, Becton Dickinson, Fortinet, and Block are up. And TELUS, Energy, Baxter International, Paramount Global, CNH Industrial, Fluor, and Embraer wrap up on Friday. In the news this weekend, Warren Buffett's Berkshire Hathaway decreased its holdings in iPhone maker Apple and number 2 U.S. lender Bank of America by more than 20%. Both moves have been well publicized, especially Buffett's steady dumping of Bank of America since mid-July. Buffett said the fair value of its equity investment in Apple was worth $69.9 billion in the end of the third quarter, compared to $84.2 billion at the end of Q2. Those numbers suggest that Berkshire's position in Apple has been slashed by 300 million shares from 400 million. That's a reduction of nearly 25%. Casual dining chain TGI Fridays filed for bankruptcy protection, saying the company still hasn't recovered from the effects of the COVID-19 pandemic, as well as its capital structure. The company said in a statement that the Chapter 11 filing does not affect its 56 franchisees across 41 countries and will continue normal operations. The next steps announced today are difficult but necessary actions to protect the best interests of our stakeholders, including our domestic and international franchisees and our valued team members around the world, Executive Chair Rohat Manocha said in a statement. The restructuring will allow our go-forward restaurants to proceed with an optimized corporate infrastructure that enables them to reach their full potential. Thanks for listening, and make your vote count. That's all for today's Wall Street Brunch. Look for links to stories in the show notes section. Don't forget, these episodes will be up with transcriptions at seekingalpha.com/WSB. And join the elite community of real investors to unearth great investing ideas. Just head to seekingalpha.com/subscriptions.